This is the Real Estate Investing Abundance Podcast. I'm your host, Dr. Allen. I know you're excited to get into today's show, but I have a very exciting announcement to share with you before moving to the show. We've just launched a complimentary and comprehensive webinar that, among other things, shows you how to legally use passive real estate investing to reduce your taxes, recession-proof your nest egg, and take the sting out of inflation. If you are curious to learn more, go to stevetucker.com/webinar. It is complimentary and only takes a couple of minutes of your time. Once again, that is stevetucker.com/webinar. I'll see you in the webinar. Enjoy today's show. Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm so delighted you're back with us today, and we're going to take a look at a very cogent topic, and that is how technology is revolutionizing the real estate market. We have an expert with us today, and that is John Foong. Am I pronouncing your last name correctly?
You are, Alan. That is excellent. Well done.
Okay. So with us today is John Foong, and John has over 20 years of experience investing in real estate, primarily in the United States, in Silicon Valley residential and commercial properties in the East or the coastal East and the South. And he also invests in Australia, where he resides. He began investing in property at a very young age, leveraging funds from a college scholarship to purchase his first home at 18. A small university apartment in Sydney that cost $60,000, the first of 20 plus investments in Australia alone. Since then, John has made millions of dollars through buying, holding, and selling residential and commercial properties. Profits from these investments allowed him to attend Stanford University, where he earned an MBA and a Masters in Education, summa cum laude, and he was elected President of the Year. So welcome, John, and take us into the show and share a memorable experience that was key to your growth and development.
Thanks, Alan. Thanks for the wonderful introduction. Yeah, so I'm in Australia. I grew up in Australia. My dad was from Malaysia. My mum was from Hong Kong. And one of the things that are kind of idiosyncratic about Asian Australian migrants for folks who migrated in the 1970s is a large majority of them seem to force their children to play music, particularly piano and violin. Could be cello, could be a wind instrument. Just always seemed to be that growing up in the 80s in Australia, like me and my friends of Asian descent who were born in Australia, but from Asian migrants, were all learning piano, and we all didn't really like it. And what typically happens is you get forced to play starting 5 or 6. You get like, okay, but by the time you're a teenager, it starts to fade. And almost all of us go through this rebellious stage at the age of about 14, 15, 16, where we drop. We say like, no more. We finally stand up to our parents and say, no more piano. And that happened to me about the age of 15 or 16. I was kind of ready to quit, kind of like over-reading music. And then something happened, right? Something happened. And it wasn't my parents forced me or my granny bribed me, which she had done for my childhood by feeding me chocolate biscuits in order to practice piano. It's that I learned that I could play music that I enjoyed. I learned that I didn't have to play classical. I was, a big churchgoer, and they needed someone to play piano at church. And actually, it was really fun. I could play songs and sing all at the same time. And I didn't really have the courage to date that many girls back then. But I learned that I could play love songs by ear, all with the skills that I learned in piano. It was actually a formative experience because music is a really big part of my life today. My wife is a big violinist. I love playing the piano. We love to sing. We have young kids and we love singing to them. So it was really helpful that I actually didn't give up. But it kind of taught me that if you want staying power, you got to love it. Discipline and will only take you so far. You got to love it and make it into a habit. And that's how you can sustain something over your life. So that's what came to mind when you asked me the question.
Well, great example there of what really staying with something over the course of years can do for you. And also a great example of how to really sustain our interest in anything, we really need a passion for that as well.
Yeah.
So thank you so much for sharing that. I have a question. It is not uncommon for people to get a an MBA degree. It's not uncommon for people to get master's degrees in education, but what is uncommon is to have an MBA and a degree in education. How did that come about?
Oh, thanks for asking, Alan. Well, when I was growing up in Australia, the first job I had at college was to work for a company called McKinsey, which is a global consulting company. And it was an amazing experience. It's a bit of a CEO factory. And what they do is they charge you out for very exorbitant rates. They don't necessarily pay you that much, particularly when you're a junior analyst. And you go to a big company for 2 months and they pay the company thousands of dollars for you to take data, analyze it, and give them advice. It's a great experience. And part of what McKinsey do, and a lot of big other companies like that, is when you've been there for 2 years at a very undergraduate level, you can stay at the company, but they encourage you to leave the company and go and do a degree. And I'd never thought of leaving Australia. I love Australia. I'd actually stayed in the same zip code my whole life. But I was surrounded by people who are from America, from Europe, or had gone there and had done these amazing degrees, which are just very different how the education works in the US versus Australia. And I was very lucky enough to get into Stanford to do my MBA, which is what a lot of my McKinsey, I guess, mentors had done. And when you get accepted into a Stanford MBA, there are some options of what they call joint degrees. And in this case, there was a joint degree you could do with the School of Education. And Stanford has a very good School of Education. I did not particularly want to become a teacher, though I did enjoy teaching and preaching at the time. But what the education department had was a very interesting major in nonprofits. And when I was very young, about 16 or 17, the whole reason I did my degree, got into university and became a consultant was I really wanted to develop world-class skills in leadership and bring that into the management of a nonprofit or church sector. Because I saw that sector was so full of passionate people, but they ultimately didn't know how to run an organization and they burnt out. And so for me, it was a dream to get an MBA at Stanford, learn out leadership of business, and then do a degree in education that primarily focused on nonprofit and education reform. It was just an amazing experience to pack that all together.
Well, fascinating indeed. Well, let's get into to real estate here. And you started at a very young age. And so how did you do that? And how can other people follow your example?
Oh, thanks. Thanks, Alan. I mean, I was lucky in the sense that I came from a tradition, as did my wife, where whenever you had money, whenever you had income, you just got into property. My dad in particular, he'd invested in property ever since he migrated to Australia, and his parents when they were in Malaysia. He was an auditor at a big bank and then actually became a real estate agent at the very end of his career. But he always did that. Whenever he had income, he would buy a property, right? Buy an investment property. When he had more income or more capital gains, he would, as your listeners know and have learned about, he would buy another property. It was just the thing. So I was kind of born into that culture. So there was an expectation that when I turned 18 and got an income, my granny sat me down and said, John, here is a book called The 7 Steps to Building, Property Wealth or something like that. We're going to buy property. You're not going to spend the money that you got left over from the scholarship on anything else. We're going to buy property first. And, as you mentioned in the introduction, the first property was $60,000. That means you only need, $10,000, $15,000 for a down payment. And you don't need a lot of positive cash flow. And I was just living at home with my parents, because a lot of people do that at university and college in Australia. So it was actually quite easy to buy a property that cheap. They don't exist anymore at that price or anywhere near it in Sydney, but that's what it was. And so that's how I got my start. It was just what I was always expected to do. And it seemed like a perfectly good use of money at the time. So I was kind of lucky that I wasn't forced into it, but that was the role modeling I'd always had.
Oh, it's always nice to have role models and mentors who can take us into particularly real estate investing. Most people aren't that fortunate, and most people don't really understand the value really of real estate investing. And so most people don't know how to develop wealth. So how can others do that if they don't have scholarships and they don't have mentors and they don't have parents that have led the way?
Yeah, the thing about real estate, I mean, you can invest in a real estate investment trust, and that's like buying a different kind of stock. That's probably better than just buying stocks because you'll learn some things, you'll get some exposure, and if you kind of get into that, that'll help. But the thing about, I guess, what I got into, led by my dad, residential property, it is something you got to get your hands dirty with. It is icky. It's you're dealing with tenants, you're dealing with loans. It's not like I'm going to go online to my stockbroker, buy this stock, and then sell it. And I can see there are a lot of barriers to entry. It's a scary process. It's full of fear and speaking to people, and it's annoying and bank drafts and all this other kind of stuff. So, like with anything, the journey of 1,000 miles starts with a single step. I would just encourage your listeners, if they want to get into it, just to find baby steps. So for me, can you surround yourself with people who've done it before? Can you find that friend who's done it and just sit down and have coffee with them? Once you've got your deposit, which is non-trivial, depending on what you want to buy, can you at least have the conversation with the bank? The good thing is there are now increasing amounts of people who just want to help you. Like a lot of mortgage brokers out there, they're incentivized to get you through the process. Or you find an agent, who's going to act as your buyer's agent. They're going to try and push you through. You're going to get a lot of positive peer pressure. So again, I'm not speaking from experience because I had the privilege of just, doing what was expected of me, and that's how I got into it. But certainly, whether it's trying to buy a house or losing weight or running a marathon, I'd find those baby steps, which are typically rooted in people who are experts or best friends who are doing it too.
Well, excellent advice there. Let's talk particularly about passive investing,
Yeah.
as opposed to active, which you got your start as an active investor. But many in my audience are passive investors who are successful and fulfilled professionals. So let's talk about practical tips on how we can invest passively in real estate to grow our net worth and build our wealth generationally, as well as how to make our first million in real estate.
Yeah, thanks, Alan. And just to be clear, I do work in real estate now. I work for a company called Domain, which is one of Australia's biggest property portals, a bit like a Zillow or a Redfin, and I run the sales team there. But for most of my career, I've been, like most of your listeners, professional. I was a consultant. I got my MBA. I ended up working for Google, and in marketing and sales, and that was my focus. It wasn't real estate. Real estate was always something we did on the side. It was always our family business, and same with my wife. And so I can relate a lot to your listeners. And I would say the most powerful thing that I did to even answer that question of like, where does that first million come from, is I used a very simple technology of a spreadsheet, whether that's Microsoft Excel or Google Sheets. And what I did was I built my own just profit and loss statement and balance sheet. It was pretty simple, right? It was just like, here's all the stuff I own, here's what I owe, what's left over. And then profit and loss was, here's how much I earn, here's how much I spend, what's left over, right? Super simple stuff. But the power came when I actually merged those things together and said, okay, let's say that I have my balance sheet, I'm net worth of $200,000, right? That's how much I'm worth. And then every year I'm earning $70,000 from this job, and I'm saving most of it because I'm just living at home. I can add $30,000. That means that every year my wealth goes from 200,000 to 230 to 260. Just very simple spreadsheet. But then the power comes when you start to play out scenarios. And the best scenario, of course, that we know of, right, is residential property. You start to go, okay, I'm going to use some of that $200,000, whatever's liquidable as a down payment. I'm going to pour in that $30,000, into interest payments and principal repayments. That means I can buy a property of about $200,000. Assuming I buy a decent property, on average, I can expect a 5 to 7%, increase in capital gains each year. Let's call it 5%. And then once you start to build that model, you start to see the delta of a leveraged residential property that's cash flow positive versus sticking the money in a bank where you earn very little interest, or even invest in the stock market where you make 5 to 6% capital gains on average, sometimes higher, sometimes lower. But of course, you don't get the leverage that you get from, only putting 20 or 30% down. You have to put 100% down, for stocks. And I found that simple act of doing that, and it's been particularly helpful when we've got married and having kids and things like that. That has made the $1 million question possible, because you start to see how long it might take. And you start to see the difference between taking one move, not property, and another move, leveraging property, and another move, leveraging property, and then investing in the property when you get the chance. So you don't need advanced spreadsheeting skills. You may need some help. You're not used to using one, but that was very, very helpful to get me started.
Well, wonderful concrete example there. So the illustration you provided, it seems to me like that is an active example. So how did you transition really to passive investing?
Oh, actually, Alan, maybe I got the definition wrong. I thought passive was when that's not your full-time job. Maybe give me the definition that you've been using with your listeners. I apologize.
Well, passive investing would be when you're investing with sponsors
Oh,
and you're just a limited partner in the activity there.
got it. Sure, I understand. Well, that's a different story because I actually have done, I guess, for that definition, I've mostly done active investing, but I did do a bit of passive investing actually with some of my school friends from Stanford. So let me talk a bit about that. And real estate investing in America, it's very, very sophisticated. In Australia, typically you have real estate agents and maybe some people like me who work at some of the big real estate companies, but you don't actually have many big time real estate investors. It's not really a career path. You hear about a few people who've made millions of dollars doing it, but really it's not like a thing. Remember, but when I was at Stanford, it was a massive deal. It was the real estate investing club was one of the biggest, clubs, functional clubs there. And it was a career that many people pursued, partly because it probably had the highest expected return on your time. These are the people who generally made the most money and worked amongst the least hardest of anyone kind of business school. Very, very attractive. And so what we did, I had a bunch of friends who I was quite close to, who we lived with together, and some of them were real estate investors, like as limited as partners, but most of us weren't. We were off working for Google or a consulting company, and that's how we got our start. I got my start doing passive investing, where for one of the ones we bought a hotel, in Pennsylvania, and there was the land that was being actively managed by a hotel brand, and I remember we were a syndicate that was part of a bigger investment, so we probably had a small percentage of like a 10% bucket, and that's how we got started. It was partly just an excuse to stay connected and learn together, because we all went all over the world after our degree, and we wanted an excuse to kind of learn together. But it certainly for me was a very eye-opening way of understanding what's possible when you do passive investing.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Yeah, that's what I understand, that investing in the United States is very different than it is in other countries, primarily because Congress loves for people to invest in real estate, and they've written the IRS regulations to really encourage real estate. And I guess that doesn't necessarily happen to the degree in other countries that it does in the United States. Interesting, the difference between countries. And how things operate. You have been involved in technologies really throughout your entire career. And I have just seen really in the last 3 years, prop tech companies start to pop up all over the place. And I mean, even 5 years ago, it was difficult to really find technology platforms that were comprehensive in terms of asset management and property management. Today, they're just popping up all over the place. And there's boutique operations that focus on smaller operators. And then there's, of course, the large commercial platforms out there. Well, tell us about this revolution in real estate and how that is actually revolutionizing the industry. And I hadn't even mentioned the fact of the different currencies that are becoming part of real estate.
I think technology has been quite interesting for real estate because in some ways it's made some dramatic differences, which I'll talk about, but also some ways it hasn't. It still takes like a month to close a house, right? It still takes a long time to like do the negotiations, and there's still a lot of paperwork. And, that's understandable given these might be $1 million transactions. But, if you compare to like how technology has revolutionized travel, or Uber and taxis or food delivery or internet search versus going to the library or reading the newspaper, where it's literally cut the cost of and time involved by like 100 times, real estate is actually pretty sleepy by comparison. But for me, I can see a bunch of ways where technology has been a great equalizer in real estate. So back in the day, the only people who knew all the information were the real estate agents, in terms of like historical prices or even what had sold. Now that has been democratized. You can go to, Zillow is a great example. My company Domain has things very similar, and go check out the valuation of your house, right? Very easily. Go look at all the comparables in the area, look at all the sales. And this is very, very simple stuff, right? So in some ways, it's augmented the role of the real estate agent, because they are no longer very useful as a data provider. They're really earning their commission now on the quality of their advice and their ability to attract buyers if you're a seller, or advise you on the right house if you're a buyer. And so technology, similar in other agencies, like if I think of travel agents, right? Like back in the day, there was no way to book except through a travel agent. And so they were the gatekeepers of that. But now you can book quicker yourself. So if a travel agent is going to earn their commission, they have to add value on top of those things. And what I've seen in real estate agents, both in America and Australia, is they have adapted. You have not seen people selling their house by themselves. It's still at over 90% are using an agent. It's at all-time highs. But the value of agents has shifted, because it's not about information provision. Technology does that for you. It's about providing value-added advice. It's about providing guidance. It's about curating what you might see. So it's one kind of realm of technology to talk about. The other one is really around artificial intelligence and the move towards suggestion rather than kind of reaction. I'll describe what I mean by that. Back in the day, searching for real estate, even online, was like a classified, which is like, okay, like I'm looking for houses in the suburb, or I'm looking for this house, or here are the search parameters. And that was very, very useful. That was a huge step forward versus having to scroll through that newspaper or go to a bunch of real estate agents and ask. But it still wasn't necessarily that intelligent. It was fast, but not that intelligent. And, I'll just talk about some things that have happened in other industries. Let me take video watching, right? So back in the day, you got your video, you went to a DVD, DVD store like Blockbuster, you got it. And then Netflix came aboard, and instead of going to a DVD store, you could go onto the Netflix website and say, hey, I want to watch this movie. Or what movies do you have? Great, I'll pick that. And then something interesting happened. Netflix no longer just said, okay, go search our movie base and we'll serve you what you want. They started suggesting something. They started saying, oh, okay, like, because you watch this, because you like this, you might like this, right? And then what you got was YouTube took that to the next level. They're not, and YouTube basically started automatically playing the next video based on what you had seen, right? And I see that with our kids' videos all the time. You start on one, it just goes again, and sometimes a different brand, and it can just play all day, this autoplay. And then an organization, an app called TikTok came along, and I'm sure many listeners are aware of TikTok. It's a very popular app. And TikTok doesn't even wait for you to choose anything. It's not like Netflix that waits for you to choose something. It's not like YouTube where, like, based on what you choose, it gives you something, after that. It just starts playing based on where you are, based on your internet searches, and then just plays something else. And then based on what you actually watch, or based on what you flick away and say, no, I don't want to watch that, it continues to adapt the algorithm to suggest. And that's basically where the world is going. From a world of like, okay, search for it and we'll give the result, to kind of like, we're going to tell you what you think you might like based on your behavior, and we're going to adapt what will serve you based on what you end up watching or not. And there is a world where that is coming to the real estate industry. It's a world where that's coming, because primarily we're still reactive search. Show me all the houses in the zip code that have these characteristics. But what if we looked at, by the patterns of what you search for, by kind of other personas, people who are like you, what they do. We just said, look, here are 10 houses we think you like. And based on how you engage those houses, we would serve you some more houses. Maybe even things you weren't looking for. You might not be looking for an apartment, but actually your search behavior indicates that's the best thing. You might not be looking for an off-the-plan apartment, but that's actually the right thing. And that's where technology is going in all industries. But I think particularly with the advent of AI, you're going to see a lot of that. And certainly that's something we're working on, at Domain.
Well, fascinating. I'm not sure I like that.
It's a little creepy.
Certainly for Netflix, I don't know. They don't seem to be able to get my algorithm correct.
That's true.
Because they're certainly not suggesting things that I really want to watch. So I don't know why that is. Or maybe I'm just a confusing person. I don't know.
Unique, Al.
Yes. Well, anyway. So, John, tell us specifically what you do, what your company does, and what services you offer to our viewers and listeners.
Sure. And I'm not sure how much crossover there'll be, but I'll tell you what I do anyway. I work for a company called Domain. It's one of the largest portals in Australasia in the Southern Hemisphere. It, like Zillow, like Redfin, like Realtor.com, is a way that both sellers can come and say, here is my house. I'd like to sell it because we don't have a multiple listing service function in Australia. And when you're looking for a house, you can either go to a website or our app, and say, look, I'm looking for this kind of house, or based on what, I searched for, here's a house we might like. And we'll do things like tell you the value of your house and historical photos and all that kind of stuff. So very, very similar. And I had the privilege of being the chief revenue officer there. So we have, about 500 people in sales and customer support and, and operations. And that's the team I get to look after. And I'm really proud I've gotten to that for 2 years. And our job is really to inspire confidence in life's property decisions, because it's really scary buying or selling property. It's a big deal. You might do it a few times. And we're there to help hold your hand. We're not taking the place of real estate agents, but we're there to help everyone operate better. And so that's primarily Australasia, Australia, New Zealand, with a presence in Philippines as well. So, if you are in that industry, in the portals industry or in real estate property technology, because we have a lot of prop tech SaaS functions, like, a DocuSign product, like a historical listing on all the photos ever taken of most of the properties in Australia. I'd love to connect with you. Best way is on LinkedIn. I'm John, John Foong, Foong, of domain in Australia. There's not too many people with that name. I'm sure Alan will have it in the show notes as well. Or you can connect with me at our website, domain.com.au/research is where we publish a lot of our thinking, all of our white papers. So we'd love to connect in any way that's useful for your listeners.
And all of that information will be in our show notes. John, just one last question. Share with us one of your most difficult setbacks in life. How did you come through that time, and what was the big takeaway that you learned from that experience?
Oh, thanks, Alan. I haven't spoken much of my professional career, though I think many of you will relate to this, being professionals and passive investors. I had the privilege when I was at Stanford to intern with a small company at the time called Google. This is back in 2006. I was one of their relatively first employees back in Europe. I was a marketing intern, and I ended up staying for 13 years. And I loved it. I loved it. Google is an amazing company. Many of you have been there, worked there, seen the movie The Internship. It was an amazing place where anything is possible. And I stayed there for so long because the mantra there at Google was like, hey, like, you're a smart guy who works hard and knows how to deal with people. We're just going to throw opportunities at you. And because the company was growing so fast, 20, 30% every year, there was always something new. In the beginning, it was just search. And then there was search plus display ads. And then YouTube came along, and then Gmail and Google Cloud, and even failed things like Google Glass and all that kind of stuff was all part of Google. And I had an amazing journey there. But the setback for me was, at some point, what I wanted from the company was not what they wanted to give me. At some point, I was leading a team of a few hundred at the time, running their global agency group for Google Cloud. And that's a position where I wanted to stay. But there's always changes in leadership and things like that, and it just doesn't work out. It's a setback. And I wasn't used to that. I was used to kind of getting bigger and better and more and, all that kind of stuff, and doing my real estate investing on the side. And, those setbacks are silver linings if you look at them. They're opportunities to explore who you are. It forces you, there's a, tragedy or difficulty brings clarity. It forces you to ask the question, who am I? What am I here on this earth to do? What do I value? And we had, a very young child at the time, and it was a time of searching, of asking, of consulting. And it was great because it made me go through and have those conversations with my wife of like, what are our financial plans? What are our plans of family? What do I want to achieve, on this earth? And it took me to different places. It took me to work at Uber for a few years and do something different there and have a great experience. And it ultimately led us back here to Australia, back into property, doing cool stuff, taking some of the stuff I love, technology, leadership, building marketplaces where buyers can find sellers and buy other products. That's what I got to do at Google, and Uber I get to do here. So setbacks can be a wonderful gift, even though they're very painful at the time. And that's certainly something which ultimately led me to this company in this place.
Well, thank you, John, for being with us today. And thank you for sharing your life stories with us and your successes and your setbacks. It's been a pleasure having you with us today, John.
Thanks, Alan. And thanks for your work in terms of helping investors, particularly passive investors, achieve their financial goals and their broader goals in life. So thank you for the service, and thank you for me be a part of it.
It's been a pleasure. Thank you, John. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar, that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.